And now, The Money Show with Motheo Khoaripe
on 702. Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa CIB, proud hosts of the Macro and Risk Management Conference 2025. Absa is an authorized FSP and registered credit provider. T's and C's apply. Good evening and welcome to the Thursday edition of The Money Show. My name is Motheo Khoaripe. I don't have much good news to tell today. The interest rates unchanged. Our economy still not growing, and the higher interest rates that we need to deal with in this particular economy. Some stories coming out of the beverages sector. Coca-Cola speaking to job cuts. We'll cover all of that on The Money Show. The South African Reserve Bank has cut interest rates by 125 basis points over the past year. Today, that all stops. That all stops today. The governor, Lesetja Kganyago, announcing a 4-2 split between the governors. The interest rates go unchanged at 7%, prime lending rate at 10.5%. What does that mean for you and me as consumers in this particular economy? Dr. Goolam Ballim, Chief Economist at Standard Bank, joins us for that conversation. Reece Dyer, the CEO at Ooba Group, they deal, of course, with home loans and bond originations. We'll be talking about the rents and cents of buying a home and how the market looks like with this interest rates going unchanged. A market commentary covered by Rudy van der Merwe, of course, from Portfolio Manager at Advice Works, who'll look at the Rand's reaction to, firstly, the US interest rate cut last night and also going into today's decision from the South African Reserve Bank. Later on the show, we have Tech Thursday, looking at the online gambling boom in South Africa. Things are changing with a lot of the casinos now on our mobile phones. A danger if you, of course, lose all your money, but all the gambling companies smiling all the way to the bank, the likes of Sunbet reporting a more than 70% growth in the market. We'll be talking to Spumelele Zondi about that particular conversation. Then later, our small business focus, looking at influencers in the country, those that do advertising online, on our social medias. They've caught the eye of the revenue collector in the country. SARS now looking at the monies that they earn and just how much tax they are paying. Luncedo Mtwentwe, Managing Director, Advantage Advisory, joining us for that conversation a bit later. In our investment school, we talk the Rand roulette. When is the right time to take your money offshore? We'll be talking to Patrick Mathidi from Aluwani Capital Partners and Booysen from Rand Swiss. So do stay tuned here on The Money Show. Let's talk money.
The Money Show
with Motheo Khoaripe
on 702. Let's walk the talk.
If you are like me, you would have been crossing your fingers for a rate cut from the South African Reserve Bank. I mean, all indications were that it was possible. There was a bit of room for that to happen. Inflation was at 3.3%. We were looking at a better GDP growth number that came out earlier in the month. And inflation also was quite steady. But the South African Reserve Bank meeting this week and the MPC deciding to leave things unchanged. They've cut those interest rates by 125 basis points over the past year. And they say they want to have time to look at how the market responds to those particular cuts before they do any further shaving of those interest rates. We're joined now by Goolam Ballim, the Chief Economist at Standard Bank, and of course, looking at the property market with Reece Dyer, the CEO of Ooba Group. Now, let's get to Goolam first. Goolam, looking at the assessments from the MPC, this was a very interesting statement from them, saying they are looking at, a particular time where they'd like to assess how the past cuts have gone and where that leaves them as the MPC. What's your take on this particular decision?
Motheo, hi, and thanks for having me. We did go into this meeting, as did many other analysts, expecting that the Reserve Bank would not trim rates. In other words, they would hold monetary policy steady, and certainly that was the outcome. Of the 6 voting members, 4 voted for steady rates, and 2 were inclined to call for 25 basis points cut. So you're correct in suggesting it was plausible to anticipate some cut. All in, the manner in which the Reserve Bank is approaching monetary policy, where it wants to guide over time inflation expectations towards 3%, did augur for a slightly conservative approach. So hence doing nothing was consistent with a near to medium term ambition to lower inflation expectations, and with it drive inflation within a near to medium term framework towards the 3% ambition.
Then we're also joined by Justine Easthorpe, the Provincial Sales Manager for ooba Home Loans. The CEO, unfortunately, not available to join us. But Justine, looking at the housing market, when things are unchanged and interest rates stay higher for longer, what does that mean on your side of things? Are you seeing more customers walk through your doors, or they're holding back to see whether we'll have more cuts?
Good day, Motheo. Thank you for having me. Yes, so we're certainly not seeing any sort of reduction in the property market. We're really actually seeing quite a nice steady uptick in the property market. While interest rates are quite important to the home buyer or the homeowner in South Africa, it certainly hasn't stunted the numbers and what we're seeing from a vulnerable perspective.
When we look at the market and the cutting of those interest rates over the past year, since last year, September, what has the change been for the home loan market? Because a lot of South Africans were looking at interest rates quite high from last year, some even being cautious getting into bond agreements for their homes. Are you expecting that in the next few years, as interest rates are shaved, that will turn around for the market?
Yes, even with the shaving of the interest rates that we've certainly seen an improvement in the property market, and sentiment being that the potential home buyer is more comfortable in purchasing the property, and a big sign and signal for us is that first-time home buyer space and whether they are able to afford to get into the market, and we're starting to see that number creep up again. So that's an early detection as to whether the buyers can get into the property market, in particular the first-time home buyers.
Goolam, the SARB saying today that they're looking at a market where NERSA had a correction in terms of those electricity prices. They're expecting them to go up to 8% now. That should drive up inflation just a little bit. That was a bit of a concern for them. But also the US tariffs that have hit South Africa since August. Going forward, we have one more interest rates announcement in November. Do you think that the SARB will change its mind from its position today?
No, I think it'll hold steady. I think a few things that the SARB will take into account. Inflation over the near to medium term is likely to be fairly well behaved. We anticipate inflation of around 3.5% this year, rising to 4% next year, but generally over the 3-year horizon, remaining below 4%. Secondly, the Reserve Bank did raise its growth forecast for 2025 from near 1% to above 1%, to 1.2% specifically. So there's a little bit of optimism in that respect. And thirdly, the economy seems to be doing reasonably well under strained circumstances. In other words, because inflation has been low, real incomes, in other words, incomes after inflation, have been growing around 2%. And, of course, the interest rate reductions that you also alerted to, 1.25 percentage point worth of cumulative rate cuts since September of last year, has also added some additional tailwind to consumer fundamentals. So overarchingly, we have a conservative Reserve Bank with ambition to lower the inflation rate to a steady state 3%, is going to similarly behave conservatively over the ensuing quarters.
Then, Justin, when us as consumers are looking for new homes and dreaming about moving to bigger places, should we consider maybe fixing our interest rates with the banks, given that they do fluctuate from time to time? What are the positives and maybe some of the drawbacks of doing that?
So fixing interest rates in South Africa is not a common theme or thread. The average consumer looks at perhaps holding off on that holding on the fix. And when we saw post-COVID, when the interest rates were so low, banks were still pricing in higher than what the interest rate is because they need to forecast and ensure that they're covering themselves in the future. So the average South African usually does not fix their rates. It also depends on the consumer and how sensitive they are to that income repayment. So, the pros of fixing your rate is that you know what you're going to pay for your home loan over a 24, 36-month period. But then you will also, if we now are in a downward cycle interest rate, you're going to almost kick yourself because you could be paying less than what you fixed your interest rates at.
Goolam, before I let you go, it's official now. The SARB also emphasizing that 3% target in terms of inflation, saying they're likely to get there around 2027. What does that mean for the South African consumer, the lower inflation and possibly the lowering of interest rates in our economy?
So, quite simply, over the near to medium term, in other words, over the next year or two, we may have slightly higher interest rates than would be the case if the Reserve Bank was targeting 4.5%. However, if this ambition to lower inflation expectations and the trend rate to 3% does come to pass, which I believe it will, then in subsequent years, in other words, 2027 onwards, it's quite plausible that South Africa will enjoy even lower steady state interest rates. Put differently, we pay a near to medium term price by having higher interest rates for the likelihood that in the subsequent years and over a far extended period, South Africa will enjoy lower trend interest rates. So short-term sacrifice for a near to medium term, longer term gain.
All right, that was Goolam Ballim, Chief Economist at Standard Bank, also joined by Justin Easthorpe, Provincial Sales Manager for ooba Home Loans, just dissecting those numbers that came through from the SARB. Not much changed. The repo rate at 7%, the prime lending rate, the rate at which banks charge you as a consumer, at 10.5%.
The Money Show.
The markets.
It's been interesting to look at the markets this afternoon and how they'd reacted to that particular decision. We're joined by Rudy van der Merwe, Portfolio Manager at Advice Works, talking to us about the numbers on the JSE today. Not much from the mining sector, down close to 1%. Industrials are also quite firmer today, with banking stocks up more than 0.5%. Rudy, welcome again to the Money Show. First, let's deal with the rand and interest rates decision. What is your feeling around the local currency? I think it's held off quite well. Hi, Rudy.
Sorry, Motheo. I think good evening. The rand firmed slightly this afternoon, 17.37ish at the moment. This morning it was about 17.44. So no, not a major change. It does seem like, I think, parts of the market were possibly anticipating that we could see a cut today, and possibly that's what caused the rand to be slightly weaker this morning. Obviously, that turning out not to be the case means we're probably looking at longer rates for higher, and I think that's firmed the currency slightly in the afternoon session, but it doesn't have a very major impact at this stage.
Do you think the SARB's view of keeping rates unchanged and possibly doing that in November is going to put a little bit of a dampener on the JSE, which has had quite a good year, going past that 100,000 point mark this year?
It may well do so. The SARB is talking about this preferred target of 3%, which is certainly lower than current interest rates. So purely from that perspective, one can understand why they wouldn't have cut them. Just plainly state that inflation is currently higher than their preferred target of 3%, and in that case they won't be cutting. But whether the target should be 3% or not is the larger question. And unfortunately, the bulk of what we get as inflation in South Africa comes from administered prices. It's prices that are passed through from government, prices like electricity, water, rates and taxes, fuel levies, government wages, and the like, have massive impact on inflation. And those are items that are beyond the control of the private sector and the general consumer. So if the SARB does want to get inflation down to 3%, it means it needs to squeeze the private sector and the average consumer, basically strangle them to death, so that the little bit of spending that they do that's outside of the government's control is hugely constrained and sort of under severe pressure to actually cause inflation to come down anymore. Whereas the target really should be to try and constrain the spending of government or the increase in the cost of government spending. If you could constrain that to 3%, the target would make a lot more sense. But historically, that's proven to be very difficult to achieve.
Yeah, the sub-governor, Lisa Jaganyago, today speaking around that NERSA correction of the electricity price, saying that power prices are likely to go up 8% now. That could drive up inflation, saying maybe it's government's turn to do the right things from their end because they've been keeping their end of the bargain. But let's look at the JSE and how to perform today. The All Share up 55 points, not as buoyant as it's been all week. What are some of the drawbacks there in that mining index?
Yeah, actually today we've seen a bit of a pullback certainly in the gold mining companies. Gold prices have come back very slightly. We did have a reasonable time in the last while on platinum. It's going to depend on the outlook here where those prices go. Obviously, they're at very elevated levels after having a very strong sort of run up year to date. I suspect there's more capacity for them to head north from where they currently are. So the outlook, certainly for our precious metals commodity miners, still seems reasonable. At this stage, production levels are growing reasonably well, and their balance sheets on very good state as a result of higher commodity prices. And it looks like the continued uncertainty in global markets and in the global geopolitical situation is likely to be supportive of those prices, certainly for the foreseeable future, and that should play into their hands. So it's one of the sectors in our market that is still looking reasonably attractive in my view.
Better day for Valterra, the platinum producer. Mr. Price as well getting in on some of the gains. Are any market movements that piqued your interest today?
No, I think the main focus really for the day has been on the interest rate decision, and I think that was very much sort of anticipated. A lot of hope placed on further cuts at this stage. Certainly seems like we've got longer to wait. Unfortunately, the inflation targeting that they're talking about, or the inflation forecasts from the Reserve Bank themselves, are looking like the rates in the short term are going to rise further. So we're certainly at risk of if those rates stay elevated or inflation rates stay elevated for a prolonged period, interest rates could head in the other direction. I think that's something the market's trying to digest at this stage. Other than that, from a corporate news perspective, we had a very quiet day. There was a trading statement by Bytes, basically indicating that numbers are likely to be much in line with previous numbers, which were on quite a high base. So I don't think we're going to see a very significant change in the profits in the short term. I think the long-term prospects are still reasonable for that company to produce reasonable growth.
The US are starting their cutting cycle, if you will, by 25 basis points, quite shy from the US Fed Chair Jerome Powell. Do you expect a renewed resurgence of the dollar as a result?
No, I don't think so. The dollar has been certainly under pressure this year. It's probably lost 10% or so against other currencies. There continues to be a lot of uncertainty around policy in the US and the direction of that policy. So I don't think we're going to see a massive amount of confidence return in the short term. US asset prices, other than the dollar, so the share prices have actually been quite attractive, and that's mainly been on the back of excitement about the artificial intelligence space.
Yeah.
The outlook for interest rates in the US here is a bit murky. There's a lot of people that are concerned about stagflation in the US, so that we might get, even while that economy is slowing, inflation can keep accelerating, which makes it very difficult for the Fed to get aggressive on any other on further cuts. If long-term rates are rising and they've got a massive amount of debt to fund, which is going to keep pressure on those longer-term rates to rise further. So I quite honestly would not be surprised if we've seen the end of the US cutting cycle for the moment.
All right, that was Rudy van der Merwe, portfolio manager at Advice Works, breaking down the markets for us. A lot of quiet in terms of company news, but most of the reaction coming from the SARB's decision to hold rates at 7%. 10.5% for the prime lending rate. Valterra enjoying gains of 5%. Karoo, the Internet of Things business, up 4.8%. Tiger Brands up 2.7%, with Aspen Pharmacare also up more than 2%. Paper and packaging company Sappi down 7%. MTN Group amongst the losers, down 3.5%, with Old Mutual also down 2.5%. Those were the markets.
702 and K-Talk. Motheo is on The Money Show.
Welcome back to The Money Show. If you've had a hectic day today and you've missed out on everything that's happened, all you need to know is that the SARB has left interest rates unchanged, so no cut today. The penultimate decision before the one in November. The repo rate stays at 7%. 10.5% is your prime lending rate. So sort out your budgets accordingly. We've had a WhatsApp from one of our listeners, Eric, saying he's happy about the repo rate staying unchanged. He says, I'm a pensioner, so it's part of my income. Then looking at another conversation now around banks. And I want you to think about the use of your apps and how fintech has changed our lives and how more and more of us are using less and less cash. Now, banks are currently evolving, transforming to become world banking leaders around the world. The global survey conducted on behalf of KPMG International showing that bank leaders shared the areas they believe will be the greatest strategic performances over the next 2 years. So a lot of our banks are looking to change the way they do things and at the same time save themselves money and at least, of course, make more money. August Claude Ngwetsop, the financial services sector leader at KPMG Southern Africa, joining us for this conversation. What would you say are the top three concerns for the banking leaders around the world?
Sure. Thank you, Motheo, for having me on the show, and a very good evening to your listener. And yes, so to your question about the top three concerns, right, of bank leaders across the world. So what our survey actually showed, we actually interviewed more than 250 banks across the world, and three key area of concern came up, right? The first one is really that the banks are struggling to remain competitive, right, to really keep a high margin on the operation. The second key concern we found as well is that, those banks are really looking at ways to use AI to automate the operation to better service customers. So really trying to use AI more. The third one was really something that we found that key area is that it's digital everywhere, right? Digital banking is really everywhere today. In our apps, you mentioned the apps in the banking space. So banks really are looking to use digital advances from data sciences to provide more digital services. And on the back of that, of course, you have to handle cyber risk and cyber threats, right? This is really what we found from our survey across the world, yes.
Here in South Africa, the trend has really been, doing away more and more with ATMs. So withdrawing cash, something that's likely to be a thing of the past. There's more banks cut out the ATM rollouts, but also, going into a branch and doing your banking has become a thing of the past as well because we're either on our laptops or on our phones. Is this a trend that you're seeing around the world that people are looking to more digital banking, and who are some of the leaders in terms of that space?
No, you're absolutely right, Motheo. So that trend that we see in our market here, where there's really a tendency to operate without any cash, that's really something we're seeing across the world. And something on the back of that is really something which is maybe not yet here in our SA market, is the growth of what we call digital currency or cryptocurrency, which is really something on the back of all these trends where, the historical pattern of engaging with money is changing across the world, or the banking space is changing across the world. So that is really a trend that's going to, from our observation, that's going to stay and basically be here with us for a long time. There's a small difference I want you to mention maybe here is that, in the rest of the world or more advanced markets, that trend, the cashless society is more advanced. So there's less innovation in the payment space, for instance, right, in the rest of the world compared to emerging markets, our markets, for instance. So this is really the small trend we're seeing here, small differences, where we could say that, payment, we have a bit more fintech payment here on the continent, but on AI or digital currency, the rest of the world is slightly ahead of us. Yes.
When we look at the embedding of artificial intelligence in the banking sector, of course, these businesses are there to make money. So is this AI going to be used for customer relations? You will be chatting to a bot about your account and what you'd like to do, or are they going to be using the AI so that we as customers get a better experience when we're on their platforms?
No, I think Motheo, this is really a very interesting point, and I think we're already familiar with chatbots, right? In the way we interact with banking today, so we already know what banks are already doing to use AI to enable and make our interaction a bit easier or more friendly. So it's already there. What is coming really is that we have now AI used beyond that. So AI used to help banks actually originate new products, right? So you can actually use AI to look at the bank's balance sheet, and from there you can derive some specific products you can actually use to help the banks better manage their risk, for instance. So it's really that advance in AI that we're seeing here, where AI goes beyond just the automation of tasks to actually creating something. We saw it with what is called more and more either agentic AI or generative AI, both of them creating products for us. So it's really moving beyond that. I think one concern we're seeing as well is that we think AI may actually take away jobs from us, and that concern is really there. But when you look historically, advances like AI, it actually tend to create more opportunities for banks and for us, for customers, to be more productive. So there's really an element there of course of fear, but also of large promise to do quite a lot using AI.
Then just finally, looking at the new agenda, the banking transformation survey of KPMG International, a lot of the respondents, around 82%, say they plan to reduce their cost base by more than 10% by 2030. Now, reducing of course could be a lot of things. Looking at the banking sector, where do you think they're going to be shaving?
That's a very, very interesting one. And look, what we're seeing, I will just mention three or four key things, right? So when you look at the banks, for instance, today, what we're seeing is that large part of the cost of banks are in infrastructures, right? In basically your technologies. So you have large core banking systems that are used to run banks, large trading systems for treasury system like Murex, which is used by large banks to run trading operation. So what we see is that those are massive programs in banks that cost a lot. So when banks try to reduce costs, they tend to actually see how they could automate more the services by using technology and reducing costs around using technology around that part. So technology cost reduction is one part. Secondly, it's of course human resources is to see how we can use less people to do the same work. This is really what AI is enabling. So second part there. I think the third part, which really we think is also quite important, is the fact that when you are moving digital, you basically need less and less physical infrastructures. You don't have branches, so that also reduces cost, in the bank's operation. So all those together actually help banks to reduce their cost and service clients without actually affecting too much how we experience our connection with banks.
All right, the banking sector moving towards a cashless society, but also looking to cut costs. So that could mean a lot of jobs lost in the market. Auguste Claude Easthorpe, financial services sector leader at KPMG Southern Africa.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, proud host of the Macro and Risk Management Conference 2025. ABSA is an authorized FSP and registered credit provider. T's and C's apply.
About 7 minutes to 7 now. Let's talk about a very concerning story that came from the market today. Drinks giant Coca-Cola Beverages South Africa says it's in talks with worker unions ahead of a company restructuring process. You know what that means. There will be some jobs lost in the market. The firm, which employs over 7,000 workers, is set to let go of some more than 600 employees. According to the Business Day, the Food and Allied Workers Union has received a Section 189 notice informing workers of those retrenchments. Coca-Cola Beverages South Africa says it's going through a restructuring process due to evolving industry dynamics. Now, let's look at the South African job space at the back of that story. A very tough market, low growth, very hard to create jobs in, and a lot of people quite strained in terms of unemployment. Joining me for this conversation, Andrew Levy, Labour economists, are joining us here, and Zanele Sabela, COSATU national spokesperson. Andrew, I think let's start with you. Another big corporate letting go of workers as well in the South African economy. It hasn't been easy to operate in because of that low growth. How will this affect the jobs numbers in the country?
It's going to have a disastrous effect overall, but obviously in terms of the individual hardships for people and families who lose their jobs. But if we take a step back and we try and say why, what's happening, then there are a number of factors here which are terribly important. Now, we know our economic performance has been poor, the growth has been low. We know that the world has been through a difficult time from an economic point of view. But I think the key fact, if we look at the companies that have announced very, very large retrenchments in the last 10 days, 2 weeks, we've got the ongoing ArcelorMittal story.
Yeah.
We've got Glencore. Yesterday we had Ford, and now we have Coca-Cola. And I think that in many respects, an answer to this lies more in immediate short-term political alliances and the perception of the Western companies, and these are all Western companies, and their investments in South Africa, that there are more attractive places to put your money. Now, if you add to the inherent structural problems of poor logistics, an electricity supply which cannot be guaranteed, potential problems and actual problems with water and corruption, then people are saying, is this an environment in which we want to be? Add to that the fact that our productivity continues to fall, means that we become more and more competitive, more uncompetitive, with countries, if we're looking at steel, for example, like China, who don't have the world's finest record when it comes to worker rights or decent wages. But, employers and businesses buy in the best market. But I think the thing for international companies, which is making them very, very edgy, is the fact that the South African government, particularly the ANC, not so much the GNU part, the DA, have made clear statements that their friends are not with the Western world. Their friends are with Russia and China and North Korea, with Iran, and places that the West really has difficulties with.
And that could hurt our investment in the country. So, Zanele,
exactly.
Let's bring you in here into this conversation. What are the companies firstly saying about the South African economy and the market at the moment and how it's looking? And what are the workers telling you in terms of just being nervous for losing their jobs in this market?
Hi, Motheo. Thank you so much for having us. So what the companies have said, I mean, Andrew has alluded to it. Glencore and ArcelorMittal have actually spoken about the very high energy costs in this country. We'll know that Eskom has been having a hard time, but then there's also those price hikes that are actually quite astronomical. But then also adding to that is the recent problem with NERSA and its miscalculation, and that will obviously add to the problems. ArcelorMittal has also said that it has problems with transporting costs. I mean, Transnet's been having quite a time of late. They're trying to fix that. Eskom is almost on the way to recovery, but the fact that, those very high energy costs are an extra burden on companies doesn't quite help. In terms of workers obviously are very nervous. We're very nervous also, looking at what has been coming out of late. The latest one with Coca-Cola, it is actually worrying that those 680 positions are actually mostly cleaners. And these are amongst the most vulnerable of workers. And so that is very worrying because if these are the most vulnerable of workers, meaning in terms of the total, spend on pay, they are not the ones that are taking too much.
The most expensive, yes.
Exactly, they're not the most expensive. So then it makes you wonder, what is it? And FAO is right to be so upset that the company is now trying to get to workers individually when Coca-Cola has been in this country for a long time and they know how our Labor Relations Act works. There needs to be consultation. It's a 60-day process. There are no shortcuts around it. And you'll know that with Goodyear shut its doors and offered its employees a certain package. NUSA went in there and was able to negotiate for a higher package than was originally offered. So you'll see that what Coca-Cola is doing by going to the workers directly is actually not right and shouldn't be happening.
That was Zanele Sabela Kosatu, National Spokesperson. Andrew Levy, Labour Economist, talking about just how tough it is in the South African economy to keep a job and also to create one.
And now, The Money Show with Motheo Khoaripe
on 702. Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, proud host of the Macro and Risk Management Conference 2025. ABSA is an authorized FSP and registered credit provider. T's and C's apply. Now, South Africa is seeing a massive rise in gambling and betting, with increased calls for regulation gripping the industry. It's now an industry that's up to 150 billion rand and rising. People are gambling on their phones, whether it's on football or playing the lotto, through your banking app. It's really something that's shaken the industry. Yes, more money is being spent, some people getting into debt, maybe some winners as well, but it's also a tech interest because it's all happening online. We're now joined by Siphumelele Zondi on our Tech Thursday to look at some of these issues. Siphumelele, welcome to The Money Show.
Hello, and thank you very much for having me again, Motheo.
Any betting apps on your phone? Something? Are
no,
you a betting
definitely
man?
not. I'm trying to stay far away.
No, it's become a trend. Look, you look left, you look right. Somebody's on their app putting money on something, whether it's sports, soccer, athletics, or maybe even gambling through casinos online. It's a good thing for the gambling industry, but could be quite dangerous for consumers who are not wary.
Oh, yeah, totally. That's the thing, right? Because while there's popularity of it, and I think signs are everywhere that there's popularity of it, there's also worry in terms of where the money could be coming from. Old Mutual has actually said that quite a lot of people you'd find that are borrowing money in order for them to gamble, or have had to sell some stuff that they might have around in the house. And even the Lancet Commission has also said that gambling gambling possibly needs to be treated in the same way as alcohol and tobacco, as a health issue as well, and not just as a sport, and not just as a technology issue, and not just as entertainment, but we should also then look at public health as well, because of the worries that you are raising there, Motheo, and the fact that it can lead to some mental health issues associated with gambling or sports betting, which is also a form of gambling, by the way.
I mean, on the other end, you would say that developers in the country have done well to attract those eyes to our smartphones, to say you can have, a gaming platform that's on your phone, that's monetized and connected to your bank. The technology is definitely working.
The technology is definitely working. It also, I suppose, would be a casino in your pocket, if you will. It removes the stigma that people had in the past of spending hours and hours out in casinos, in public spaces where they'd be exposed. But we do know how algorithm works, because algorithm essentially tries to keep you on whichever platform that you could be using. And it's the same here with these sports betting platforms and other gambling platforms, where the algorithm is going to try and figure out what your interests are, what's likely going to keep you on. And sometimes if you win the smallest bit of money, you might, algorithm again is going to come into play to say, well, hold on, you might win more if you take that money and put it right back in. So it's algorithm really at work that's trying to keep people on and make sure that they don't get away as easily, and that they do bet on their favorite sports teams.
Are these algorithms going unchecked? Who's regulating whether they are making sure that you lose more and more money? Drawing you in, giving you a carrot on the stick, maybe winning 200 there, but losing essentially 5,000 at the end of it?
As we do know with most technologies, that legislation often follows the technology. So technology comes first. Sometimes you realize that there's a crisis later, and then what you'll find is that then legislation would want to come in and step in there. And also, there isn't really a national space, a national body where these platforms can register under. So it's sort of like fragmented a bit at the moment as well, because you find that a lot of people who are into sports betting, Mpumalanga makes the most amount of money, but it's also because the permits, most of the permits are issued from Mpumalanga, followed by the Western Cape again, because a lot of the permits are issued from the Western Cape, and then Gauteng comes third there. But it's because of that fragmentation as opposed to a control that could be nationwide on legislation that could be overlooking at what's happening in this particular space, in order for people not to be lured in and find themselves in problems and in crisis sometimes.
Yeah, and there could be some crisis if people use their salaries to gamble, because if you lose that, then you start getting into a very, very big debt spiral. Your mental health is affected. And again, speaking to how we use technology as people, we've seen these play out on social media, how people are bullied using technology. So what could be the assessing of government in terms of policy to make sure that people are protected? Because a lot of people will tell you, we want to be self-reliant. We want to make sure that we make our own decision. They tell you the same things when we talk about things like vices, like smoking and drinking. It would be the same in this case.
I suppose you also don't want a situation where you have a huge chunk of the population losing all their salaries, and because that means their money is not being put into investments, their money is not being put into things that are going to take care of them. And in South Africa, while there might not be as much regulation, you find that we are still sort of like in the teething stage of things, because when you look at, for example, the NFL in America, which is a massive show beyond the sports, you even are able to bet on the entertainment that's going to be taking place. Will this person appear? Will that person not appear? Perhaps will there be an engagement on the Taylor Swift situation all around the NFL in the US? So it goes even here. It would still be just on the sports match. It wouldn't be on who's performing at halftime. For example, if you think about the final that took place over the weekend, you wouldn't be betting on those little bits and who would be performing there. Whereas in America, it's even gone to that extent. And I suppose maybe this is where our legislators could come in to say, where do we stop? Do we allow it to grow to a level that it's grown in the United States of America and possibly other parts of the world, because you might think about the amount of revenue that the industry is putting in as well, because there is a huge amount of money, and one a study that I was reading was saying it's about 1% of GDP that's now coming in from gambling or sports betting in South Africa. So they might defend themselves and say, well, money is coming in from the industry. So
but what's the responsibility then of the industry in terms of making sure that those that do play do so responsibly? Maybe are we seeing technologies where there's a capping of an account that where they see somebody spending well over 20,000 Rand a month on betting?
Well, not yet. Interestingly enough, I actually read of a case out in the UK where the man said he received close to £1 million, but he didn't get it because it started, and actually, on the contrary, it's the opposite that started to happen, to the point that he lost it all again, because he said the industry started to, or people from within the sports betting organization started to call him on a daily basis. We have this to offer, we have that to offer. Do you not want to try that? Eventually, after day 5 of receiving phone calls, he put the money back in. And again, I suppose it goes back to what he's saying, the responsibility that as the industry grows, as we've realized that there's been apparently over 50% growth from 2023-24 from the year prior to that the industry itself might have to have some sort of self-regulation as well to, in a way, control and protect its clients, because it's its clients that whose well-being needs to be looked after.
Things are getting quite dangerous in terms of overspend on online gambling in South Africa. Siphumelele Zondi, the tech expert, joining us for our Tech Thursday.
The Money Show, Small Business Focus.
Small Business Focus is brought to you by Capitec. Start up or scale up with Capitec, the business bank for everyone. Thank you for joining us for a Small Business Focus. Tonight, talking influencers, the big money that comes through there, but also the big tax risk. Now, South Africa's influencer economy is indeed booming, and it's not just brands that are taking notice. It's also SARS, the revenue collector, also paying attention. Digital marketing expenditure in South Africa set to surpass 14.5 billion Rand this year. As the industry expands, online influencers are emerging as key economic drivers as well in their own right, cashing in on substantial earnings. Let's chat now to Luncedo Mtwentwe, Managing Director at Vantage Advisory. Luncedo, small business influencers, you can't separate the two. Influencers are business owners in their own right, but now also attracting SARS's attention.
No, absolutely. Good evening, Motheo. You actually spot on. One has to take this back, of course. If you remember, during the budget speech, SARS was, provided additional about 7.5 billion rands to 8 billion rands. And as a result of that, they were clear to say there's a lot more money that SARS has to collect in the economy. And there's more investment around AI. There's more investment as well on data analytics. And of course, trying to get more taxpayers to pay their taxes. And influencers are actually just one segment that has come through quite a lot for the past few years, that they are contributing quite a lot into the economy. Over 500 million rands that is being contributed by the influencers into the economy. So therefore, in that particular case, SARS is saying, look, if there is value that is being created, and you've got this new segment of taxpayers that are generating income for themselves. Therefore, the tax law in South Africa, the income tax, is clear that if you are a citizen of this country and you are carrying on an activity that continuously generates you income, therefore you have to declare that income to South African Revenue Services and pay your fair share of taxes. And that's what SARS is currently saying, to say, look, this is within the ambit of the law. This is within what the Act says we must do, that each and every taxpayer in South Africa that is generating income regularly, so they must declare that income in addition, of course, of some of the folks that are, working 8 to 5, those ones are being taxed on a monthly basis.
Yeah.
But if you're generating extra income, you still have that obligation to declare that.
For somebody who doesn't understand how this particular world works, a social media influencer, what does that look like and how do they earn their keep?
Yeah, so what we've picked up for the past few years, as I said, this is a movement, of course, that has taken the world by storm, especially the marketing and advertising industry, the branding, the products, the marketing of some products. So therefore, you've got, of course, individuals that are using different sort of social medias, channels to sell their products, to generate or to partner with different brands, and therefore they get paid for that. And sometimes they get paid in cash, or sometimes they get paid in kind. It's either, for instance, let's take a hotel. It will give you a stay for like a week or so. There is value that you've generated for that. That is an income, not of course in cash, but in kind. So therefore, all of that income, all of these partnerships where there's value that is being created, at the end of the day, there is a value exchange, and that's how it gets quantified by SARS to determine, to say, look, as much as you didn't get cash, but there was an exchange, you got gifts, there is value towards those gifts. So in that particular way, then, you are generating income on a monthly basis. So that is that segment that each and every individual now, they need to be aware of, that if you're partnering with brands, you're getting paid either in cash or kind. Therefore, you're actually one of those that we can consider an influencer, or you're part of the gig economy.
That the cash part is self-explanatory. You get paid for what you work for, the content that you've created. But in kind, and this happens a lot to influencers where they work with a brand and the brand will give them a phone or will give them flights for a particular trip and they can shoot and talk about it. How would they then express this to SARS? Is there a program in place where they would be able to express just how much they got through gifts and in kind, as you say?
So because of the fact that you are carrying on this on a regular basis, so you have to treat yourself, of course. If you're not doing this under a business or your business that you've registered as an influencer, you're doing that as an individual. So therefore, automatically, you become sort of like what we call a sole proprietor. Therefore, that means on a monthly basis, you have to do your numbers. You have to sit down, do your Excel, say, how much did I generate this month? How much did I even spend to basically even produce the product that was expected of me? Therefore, in that particular way, we are able to either determine that, listen, you've made a profit or not. Because the value of you being flown, the value of you or the value of that particular phone, let's say 20,000 rands. So SARS will say, what is the market value of that phone? So that's how you would declare what is the value that you have generated. So therefore, on your income tax, you'll say the market value for that particular phone is 20,000 rands. Then that is an income that you've basically generated for that month. So you have to track that. You have to be disciplined. But what is important in South Africa, Motheo, is that the Income Tax Act is clear that we work on voluntary disclosure basis. So SARS does not automatically know how much an influencer has generated for that particular year up until the influencer declares. Therefore, SARS will start now to either verify that information or either audit that information. So that is very important. That I think people should not be worried that now all of a sudden SARS will know each and every person how much they're getting. The law is clear. It's based on voluntary disclosure purposes. Therefore, the citizens have to be proactive.
So, Lungaito, this would then be important for influencers to treat themselves like businesses, keep the receipts, keep the information that would show the value of things like phones, the value of things like tickets that they get from these companies, but also just be ethical enough to, voluntarily tell SARS what they have been getting up to during that year.
Absolutely. And that's where, Motheo, the awareness and the education towards all taxpayers in South Africa, especially when it comes to their tax obligation, is very important. And therefore, again, also this not only sits with SARS only, but even private companies that are doing work with the influencers or the gig economy, especially some of the marketing agencies, have to play that role to say, how do we educate the people that we do business with so that they're not found to be on the wrong side of the law? Because some of these kids, because, they are not tax experts. All they care about is their talent and them generating income for themselves. In terms of their obligations, therefore, all parties have to come in and play that role. And that's why I'm saying even marketing agencies have a very huge role here to play when it comes to tax education and tax awareness. But as well as the influencers themselves or the gig economy, they have to take it upon themselves to say, look, since now I'm being treated as a sole proprietor, or I have to declare my income on every 6 months, what is expected of me? You're saying that you don't know. It doesn't work in the court of law.
And also the importance of getting a tax guy, getting an accountant. It's all part of being a small business. And that's what it's about. Influencers catching the eye of the South African Revenue Service. They're earning money, they're getting gifts and are getting paid in kind. SARS wants to know to make sure they pay their bit as well as business owners.
The Money Show.
Investment School.
And we're talking about a very interesting topic tonight, the Rand roulette. When is the right time to take your money offshore? A lot of conversations like this happened over dinner tables or over the braai or at work, where people are telling you, I'm moving my money offshore. I'm not too comfortable with this volatile Rand. We'll be talking about that tonight with Booysen, director at Rand Swiss. He joins us here in studio. Patrick Mathidi joining us on Zoom, head of equities at Aluwani Capital. It's very attractive, that notion that you can move your money, possibly grow it offshore. But is it as easy as it sounds?
Well, these days, it is actually pretty easy to move funds offshore. So, of course, you have to obey the rules. So you've got up to your 1 million Rand single discretionary allowance, and you can, of course, apply for the authorized international transfer, which is the AIT PIN, and that'll give you another 10 million. And that is a lot easier than it has been in many years. So, we do these kinds of clearances for clients all the time. You need to prove the source of funds. You need to obviously have the documentation in place, or you need to declare 3 years assets and liabilities. But I think SARS reserves around 21 days to get that clearance sorted out, and we've seen them go through in probably 4 or 5 days at the moment. So definitely from an administration point of view, it's actually become quite easy to get them approved. And then it's just a matter of having an international account that can receive the funds, and it's about, I suppose, picking your time on when you want to pull the trigger on the currency and executing. So we do the whole process kind of end to end. So I find it very easy. I think from a client's point of view, maybe if you don't know how to set up an offshore account, or maybe, if you're not sure whether you should be doing this through a bank or a currency, what they call a treasury outsourcing client, so TOC, then it can maybe be a little bit tricky, but really the process is actually pretty simple.
What kind of client should be looking at this option? Because I'm thinking about the deep pockets that you might likely have to move your money offshore. But what kind of client asks you or requests this type of investing?
I don't think it's not really a matter of the value. And there's many services that can do very small amounts and still build an offshore portfolio for you and correctly
externalize it. So you don't have to be
it.
well into the millions.
No, not at all. No. Like I said, it's actually much easier if you're under $1 million, because then you can use the single discretionary allowance. So it's really, like I said, I think the type of person that should be looking at this is, you should look at it in the context of your overall investment strategy and your overall portfolio. So I think it's always difficult to say when should you do it and who should do it, but really, if you have 100% of your money domestically and you work domestically and you're in South Africa, your house is in South Africa, everything to do with your wealth is in South Africa, for me then it makes sense to take a portion of your capital and move it offshore, because you can diversify. There's just investment options that just aren't available in the local market. You can access things like Tesla and exciting stocks. I think Intel is up. Intel, I think, is up 30% today. So you've got a much wider universe. But at the same time, if you live in South Africa, you are just incredibly pessimistic and you've moved 98% of your money offshore and you have no emergency funds in South Africa, you should probably start thinking about building up a reserve in South Africa as well, because it's something that you are going to adopt, that currency volatility. If the currency blows out, or like we have now with the South African Reserve Bank suddenly deciding that we're not getting an interest rate cut, and you see the currency strengthening, and suddenly you have an immediate call on your money. You need to buy a house, or you need to, you've got an emergency medical bill, but suddenly all of your assets are international. That's also not smart. Then I would say you probably need to be moving money back. So it really comes down to the client. I think all clients should have some element diversified, but there's no golden number on saying you should have 50-50 or that. It really comes down to the client situation.
Patrick, I'm quite the patriot when it comes to the South African Rand. I'm always rooting for it, even though it doesn't always turn out too good. But for somebody who's looking to move the Rand elsewhere in the world, what are those key markets where it's more successful to move our currency, giving its volatility and sometimes weakness against more stronger currencies?
Yeah, good evening, Motheo. Thanks for having me. I think it comes down to, the end objective. So what are you trying to achieve? And therefore, with that objective in mind, it kind of then leads you, to the best place where you feel that objective can be met, from an investment point of view as a start. But I think also, to your earlier question around the purposes and the type of clients, I think the other element that one should consider is, especially if one is a traveler, if you're lucky enough to be, traveling frequently offshore, whether for leisure or for business, it may be an idea to have, some foreign currency put aside, to try and smooth out the volatility. But to come back to your question, and I think it really comes down to what are you trying to achieve? And therefore, with that in mind, what's the best destination to kind of achieve that goal? And then the destination will then point to the currency. So, for example, if you're trying to invest and diversify, and then maybe you are not finding great opportunities, let's say out of the US market, because that is expensive, Nvidia, Tesla, whatever PEs there may be, but you're finding better opportunities, let's say in Asia, right? Then to access the Asian market, you may need to then convert your rand to yen. Given again, where you are finding those opportunities and how you can best access them. But ultimately, as I keep saying, where you want to be invested will dictate the currency in terms of how to be invested.
When we decide then as investors to move some of our currency elsewhere in the world, what kind of research are we doing before we even pull the trigger of moving the money and getting the forms ready? But what kind of research are we doing to make sure we also safeguard ourselves? I'm sure you can tell I'm quite conservative with moving money. Patrick?
Oh, sorry. So I think, again, the research that you need to do is, if you're diversifying purely for diversification purposes and away from, let's say, the local currency, the processes that was highlighted earlier, I think that is key in terms of the admin, just making sure that you've got the right setup and you are on good terms with the regulation. And then obviously on the other end, you need to make sure that you're investing in markets that are highly regulated, and therefore, the propensity to lose your money, to scams and all that kind of stuff, gets eliminated. And then you need to look at the investable universe. So what are you trying to achieve? What opportunities you're looking for that are not already available in South Africa? So, for example, if you're looking at investing in equities, but you do not want, commodities, you want, let's say, some thematic, type of products that is not readily available in SA, then you need to understand that, understand it properly, make sure that, you know what the drivers are, the return expectations, in local currency. And you need to have some sense of, over that investment horizon, what do you think the rand will do? Because a big chunk of your expected return profile, being a rand investor, is both the currency movement and the underlying investment in terms of, if you invested in yen, for example, what are the yen returns and what is that likely to do in rand terms, once you consolidate and bring in the currency into the equation. So all of that still points to understanding what you're investing in, what are the key drivers, what is the purpose of your investment, is it to diversify, is it to grow capital, are you trying to shy away from inflation, or is it purely a currency play where, again, you don't have to then go and buy equities or bonds, but you can actually sit, in cash. You can buy Swiss francs, for example, and just sit in that cash, and then that exchange rate against the rand, if you feel that, the rand will weaken, can be the main source of your returns now going forward.
Then, Gary, let's get into what's allowed and what's not allowed when you're moving your money. Single discretionary allowance, foreign investment allowance. What are the differences there?
Yeah, so the single discretionary allowance, that runs on the calendar year. So that's 1st of January to the 31st of December, and you can take out, essentially 1 million, and you can do it in tranches. And to your earlier question about how do you time this, how do you make the experience a little bit safer, you can, it's cumulative over the year. So following like almost a rand cost averaging strategy, if you're nervous that I'm going to buy this at the worst period and I'm going to lose money, you can do it in tranches. You can do 250, 250, 250, 100, 100, 100, whatever you want. But that allowance essentially runs for the calendar year, and then it'll reset again. So you have 1 million rand every calendar year to take out. With the AIT PIN, so that's your 10 million rand allowance, that is from the date of approval. So if you do obviously your application through SARS, and you get approved, let's say 18th of September, you will have until the 18th of September 2026 to move out your 10 million. And it can also be done in parts. It's really not an issue. Now, if you want to go above the 10 million, you can do special reserve bank approval. There are other mechanisms to transfer money out as well. So for example, now what we're seeing is there's also trust-to-trust distribution. So if you have a South African company that's held by a South African trust, for example, that trust can actually nominate an international trust as a beneficiary, and you'll be able to make a distribution internationally without limits. So there's lots of nuances to this as well. Another thing that I suppose listeners might not be aware of, that there's also a funds in, funds out rule. So if you have got an investment overseas, let's say you've taken $1 million rand out or 2 million rand out, and this year you have a call, you need to use the money in South Africa, and you bring 2 million rand back in, that actually that tops up your allowance. So now you actually can take 3 million out for this calendar year because you've brought money in. You can first kind of get that money out again, and then you can use your allowance. So it is, I think, more flexible than people maybe imagine. We kind of think of South African exchange controls and think, oh, it's impossible to invest offshore. I might as well just go with a feeder fund locally. But there are real benefits to having that diversification. But again, it comes down to you as a person as well. It comes down to what you're trying to achieve with it. But yeah, I mean, it does get very nuanced. So exchange control is a very complex field. So everything from, where's the residency? Where did the funds come from? I mean, we've had people that have immigrated in like the 1980s that are now trying to repatriate money, but they didn't immigrate properly. So it can be quite complex. But nothing that, I mean, again, a quick consultation, kind of explaining the rules. I mean, I can't explain them all on radio, but yeah, I think those are the basics. And I think the message that listeners should take, that it is actually quite flexible, despite exchange controls being in place.
When you watch movies, you see the villain want like 10 million rand to be wired to them immediately. Is it that quick? Can it happen overnight, or are you going through a few forms before that money?
No, if everything's set up correctly, it's surprisingly quick. So typically when you're trading, say if we were to say, let's buy 500,000 rands worth of US dollars today, typically you trade for what's called spot. So that'll be a 2-day settlement period. So we would trade, and 2 days later, I mean, then we do the balance of payment forms, you do all the kind of paperwork around it, and 2 days later, it should settle at the receiving bank. You can trade shorter than that. You can trade for Tom, which is tomorrow, or you can trade for same day as well. So as long as it's before 12 o'clock. So I mean, in emergency situations, we've literally done trades for clients at 11 o'clock. They've had the money in their offshore account, but it just means that we've got to do the paperwork really quickly.
Yeah.
So it's it can be done literally in a matter of hours. I know also on repatriating funds back to South Africa, depending on the banking institution that you're using overseas, it literally can be a matter of hitting the send button, and we'll wait for it on our side, and we'll see the ping come through probably 30 minutes later. So it can be really quick. If you are in that villain situation where you need to wire some money, you can sit there holding the gun on them, waiting for it to come through.
That was Gary Booysen writing a script for us about the Rand roulette. We're talking in our investment school about moving your money offshore. Patrick Mathidi, Head of Equities at Aluwani Capital Partners, joining us on Zoom. Gary Booysen here in studio. He's, of course, the Director of Rand Swiss. More information after this.
The Money Show.
Investment School.
And we're learning about moving money offshore. Rand can be quite volatile. Maybe you decide, I'd like to diversify to another market. How does that happen? We're talking to Patrick Mathidi, Head of Equities at Aluwani Capital Partners, and Gary Booysen, Director at Rand Swiss. I think let's pick it up with you then, Patrick. The strategy here is far more important, right, than not so much the timing. So what kind of strategies can people use when they're moving their money offshore?
Yeah, so I think when we speak of strategy, again, it comes back to what are you trying to achieve, right? And given what you're trying to achieve, how do you best navigate, and invest accordingly, so that in the fullness of time you can look back and say, actually, my strategy worked, and therefore reap the benefits of that. So typically, I think as Gary mentioned earlier, you don't want to put all your eggs in one basket, just from an investment, principle point of view, irrespective of what currency you are invested in and how that is behaving. So you do want to have a little bit of your investment pot, spread across different investment strategies, such that if one works, as the market goes through and cycles, if one doesn't work, hopefully 2 or 3 other strategies within the pot actually come through, and therefore you keep moving forward and growing your investments and accordingly. And then for us South Africans, we have for the longest of time, sort of being in this closed economy, that yes, it's sort of open from a currency flow point of view. But if you look at the GDP, we're pretty much a mining, sort of a village, which has we produce stuff from the ground and then ship it offshore, and therefore the currency becomes very important, not only for those who want to invest offshore, but also in terms of what's happening locally from a growth point of view, right? So our growth prospects, are linked pretty much with what happens with the currency, just given the openness of the economy. So you therefore want to have a little bit of diversification, not only from an investment destination point of view, but also from an underlying currency point of view, where you don't want, all your eggs to be exposed to one currency, such that, if the Rand, let's say, depreciate quite substantially, which it has a tendency of doing every now and then, you find your investments, lacking in diversification, and therefore behaving similarly, and then suffering, that depreciation in the currency. So with that in mind, in the need for diversification, the strategy then becomes, how much to put offshore versus in SA, right? So how much to have in other currencies versus your home currency. And then typically, if you look at a typical pension fund, which is where we play, the regulation is very clear as to how much you can take offshore. But for an individual, it depends on your circumstances, the other assets that you may have, where you are in your growth, from a revenue earning point of view. And so you kind of need to also to bear that in mind and not just ship everything offshore, right? Because then, diversifying, you're actually exposing yourself to the currency the other way. So once you have that in mind, in terms of how much to take offshore, then you need to go a step further and say, okay, where am I finding the best opportunities, for my rands, when I land offshore, right? So again, in the past, the US has been the most favored destination, largely because it has outperformed, other markets, for the longest of time. But of late, it has kind of been wobbling with other, jurisdictions actually coming through. So you need to then diversify and say, well, I can't just be investing in the US just because it's done well. well previously, but I need to have, a little bit elsewhere. Let's say Asia or China, for example, at some point was very popular, and so it goes. So then again, it's sort of the same principle of making sure that you're not putting all your eggs in one basket. You continue to diversify, and you hopefully, as I said, if one investment doesn't work out, hopefully the others can still carry you through, and then come back and meet your objectives in terms of your strategy.
I'll ask this question to the both of you, Patrick and Gary. When moving money around, what type of documents are we talking about here? Of course, your ID, whatever, but like you moving millions in some cases. So what is needed from you from a regulatory point of view?
I suppose from our point of view, I suppose it has become more stringent in South Africa since the grey listing. So you do need, each FSP that's moving money, or each bank, they have their own what's called RMCP, so their risk management compliance program, and they spec out like what documents they require to onboard you as a client, and the typical documents, as you say, probably almost certainly an ID, proof of bank account. Proof of residence. Usually, some people also require proof of a tax number as well, and they have to prove that they can know their clients. So that's the typical documents that you require to open any account, and from there it's really the internal mechanics of the platform that you're using. So you can move money with a phone call. Once that's been cleared,
once that's done,
once you've been essentially FICA'd and your KYC is.
So you can't anonymously move the money.
Those days are gone. And if you are using layered structures and that, these days we have to get to what's called the UBO, which is the ultimate beneficial owner. We need to understand what entity is controlling the funds. So the old days of numbered accounts and trusts with no beneficiaries listed and just money flowing from one place to the other, that has become a lot more stringent, and there are very, very strict rules and very strict penalties in place. So you can expect some level of KYC due diligence, but from there, once the accounts are open, then it becomes, as I said, fairly simple.
It's all good and well moving the money offshore. Would you like to add on to that, Patrick?
Yeah, if I may quickly, I think the one key element which is part of the anti-money laundering regulation, your proof of funds or your source of income is quite key. So you can't show up in my office with a bag full of cash and say, okay, please, let's take this offshore. So you have to show that money was acquired through legitimate sources, and there's no subversion of any regulation. And once you've passed all the hurdles, as Gary mentioned, there's a requirement for ongoing screening. Right, so for you need to every now and then provide more documentation in terms of where you live, your source of income, and just to make sure that what you said initially is still relevant going forward.
You're spoiling a lot of movie scripts for me, but it's fine. Let's talk then about the taxation around this. Anything that is definitely certain, death and taxes. Moving this money around, of course, then there are some duties.
Well, look, the taxation, again, it's complex because it depends on how you're investing and which type of tax you're talking about. So if you're talking about an immigration where essentially you're going to be leaving the country permanently and you're trying to move assets, your local self will sell all your assets to your international self. So you'll have a capital gains tax event on any assets that you have. In terms of if you as Patrick was saying, if you've improved the source of funds and everything is legit, you've opened an account, you just want to move it, there's no tax on buying dollars or short of, I suppose, VAT. But that doesn't create a tax event in the client's name. But I think it is important to understand like the tax implications of having an offshore portfolio as well. So probably the one that gets talked about the most is the CITES taxes. So specifically, if you're investing directly in the US or directly in the UK, there are essentially death taxes in the US, kind of where that starts to become observed is at $60,000 invested overseas. And above that, as a direct investment grows, it's actually a tiered scale all the way up to $1 million. And at $1 million, you could potentially pay a 40% estate duty. Now, in South Africa, our estate duty is at 20%, up to 30 million, and from 30 million onwards is at 25%. So the challenge is that if you don't structure it correctly, you might end up having to pay the IRS a whole whack of cash. And there's all sorts of products that can do this. So the guys look at the offshore endowments, offshore sinking funds that essentially swap your tax position with an insurer. And in that world, the insurer is essentially paying the tax, and you can avoid the CITES issues. But it also, as Patrick has kind of mentioned, it depends on the territory that you're investing in as well. So if you are looking at Europe, for example, you're not facing the same risk.
But it's possible to be taxed in both jurisdictions.
And then you've got to look at the DTA, so the double taxation agreement. So the tax does become a little bit more complex. But just one other point I'll make as well. If you are investing and you are expecting a weaker currency, there is an advantage to a direct investment over a purely local feeder fund direct investment, in that you won't be taxed on the depreciation of the currency against the principal of the investment. And what that means is that it can be slightly more tax efficient to take a direct investment over a local investment in a weakening rand environment. In a strengthening rand environment, works the other way around. Inverse. So if you're a patriot and then maybe it would be better to go through a feeder fund.
That was our investment school. Unfortunately, running out of time. Very, very interesting conversation there. When is the right time to move your money offshore? Patrick Mathidi, head of equities at Aluwani Capital Partners. Gary Booysen, director at Rand Swiss. They are head teachers today on Investment School.